Mid cap is already down by 18% and small cap is close to 22%.
And that is in a technical bear market territory now.
Mid caps and small caps are so overvalued, and they're more overvalued than even 2008 level.
Indian markets could not just go down from here, but could stay at this point or slightly lower amounts from here for a long period of time.
Across the board, people are just trying to buy the dip.
We see people very casually talking about making 25% CAGR in the long term. For every new 100 SIPs which started in India in the last month, 109 SIPs got cancelled. I personally did put in more money last month.
Narayan Murthy again making news.
If companies are planning to lay off, it is good for shareholders.
That is cutting down all the ineligible people who are not ready to do hard work, who are not ready to put in that effort for themselves and for the company.
The fear is real.
But first of all, I would ask every youth who's listening to this video, are you even employable?
Today's episode of the Aftermarket Podcast is interesting because it is in this current week that Nifty small cap fell by more than 20%, officially touching the bear market. So rightfully so, a lot of people are panicking. And in this episode, we'll try to break down what should you be doing, what is actually happening, what are pro investors saying, and what can you expect from the market going ahead. That's what we'll be discussing in the first story for the week. And the second story of the week is Infosys laying off 400 freshers from its Mysore campus very abruptly, and all the media storm around it. So we'll have a quick discussion on if that has some merit to it, and if there is some rethinking to be done both from the company side, the PR side, and also from the employee and the workforce side. So those are the two interesting stories for the day. And as always, make sure you subscribe to this channel if you want to see such interesting content, and also subscribe to the MarketFeed Clips channel, where we'll be posting bite-sized portions of this podcast. So 7 back-to-back red candles in Nifty. I think the most we have seen consecutively over a long time, and the market's falling back to its support near 22,800. That's what is happening over this week. And one thing to be noted here, while Nifty has fallen back to 22,800, mid caps and small caps getting punished very, very bad.
Yeah, just like I said, even in the last weeks of our podcast, there should be really strong triggers for market to rebound. Small upticks are again a reason for FIs to come back and sell, and that is what we are seeing. There is no absolute strength in the market. People could be optimistic, but we should not ignore the fundamentals.
But again, speaking about triggers, there are good triggers trying to be implemented by the government. We had a okay-ish good budget, actually, if we speak about it. Then, hey, interest rate cut just landed last week. So I think these are also good triggers, or at least the government is trying to bring more liquidity into the market, trying to give good signals for the market to move up. Attempts are being made, but then, hey, all we are seeing is FIs selling heavily and then markets moving down. But yeah.
I think, but these are the things that government is planning to do, and they'll start doing and implementing now, and the results would be seen much later. So now that they have proposed this, in future, probably markets would see the fruits of that.
And especially in a bear market, famously, even the good things get discounted and they don't get any value. And if it's the bear market again, the smallest of the small triggers can cause the market to fall by quite a lot. I think that's where we'll get into the official introduction of the 13th episode of the Aftermarket Podcast. So let's get started. My name is Ajay Ajit. This is Nihal.
Hi.
And this is Sharik Shamsin, CEO and co-founder of MarketFeed.
Hi.
So what's the first story for the day?
Like rightly you mentioned in the starting, mid caps and small caps are being punished a lot, and mid cap is already down by 18% and small cap is close to like 22%.
That is the talk of the town everywhere.
Yeah,
That is what I see. Small cap now down by near 22% from its near high, and that is in a technical bear market territory now, and that is all what people are talking about. Hey, what's happening with mid caps, small caps? Should we stop investing into small caps? Should we see a lot of people stopping SIPs into their small cap funds anymore, and that's kind of baffling. I do not completely understand that. I'm like, hey, if you are a person who were willing to buy small cap mutual funds or stocks 6 months before when it was 20% high from there, then why are you not buying it anymore now when it is available at a 20% discount? But again, things are very interesting when I look around, when I look into Twitter. comment section, I speak to people in the office, I hear about people in panic, people wanting to not invest into equities anymore, stopping their SIPs. I think we should talk about that.
I think that is the reason gold is also shooting up a lot, and maybe
that narrative is also there. I mean, year to date or in the last 12 months, Nifty is up by like not even up as much as a FD, while gold is up by more than 25 or 37%. So all of these narratives coming together, definitely not good time for equity investors, equity markets, anyone talking good things about equity investments.
So let's talk about what is happening now in the market. So Nifty has fallen by 13-14%. Mid cap and small cap, as Nihal said, has fallen by quite much more. And if you're looking into the whys, we have already explained this. The first thing is FIA is continuing to sell. 1 lakh crore of equities have been sold in the Indian market over the last 45 days, calendar days, by FIAs. That is worth nearly 2 IDFC First Bank's total market cap kept together. Right? FIAs have just sold off in the last 45 days. So while that's happening on one side, we also need to understand that despite a lot of boosting activities that the government is trying to do, not much is happening to the market. Or
that's where maybe we should talk about the interest rate cut which was announced last week, right? And normally, as observers of the market, of investors in the market, we see RBI coming out and announcing an interest rate cut of 25 basis points. It's generally a good thing. We have talked about that a lot in our podcast as well. When interest rate is cut, it means people have more money in their hand. They could spend more.
Economy will grow.
And because of it, stock market should do well. But right after the day from which the interest rate cut was announced, we could only see Nifty moving down and down, even creating fresh lows. So that is, I think, something we should be discussing.
So for a long time, this interest rate cut was expected, and I would say it was even delayed in India. And the interest rate cut that came in was only for 25 basis points. So what actually happened or translated was, the question is, was it too little too late? And will this 25 basis point cut, will it have a huge impact on the Indian economy? That's what is being discussed.
Right. And that's where I think in US, the mention is slightly not really aligning to what is happening in India. In the US, they are talking about maybe not even having any rate cuts going ahead is what they're having as a narrative there. But I understand the fear is real. People are definitely concerned about what's happening. Should they be investing? Should they stop investing? And all of those. And that's where I see this very, very interesting data, because it's interesting to get stories from your friends and family and what you see in the comment section. But there is this interesting data which says that SIP stoppage ratio is 109%.
Oh.
I think the number is correct. It's nearly 109%, which means nothing but for every new 100 SIPs which started in India in the last month, 109 SIPs got cancelled.
So people are starting to feel the pinch. They're starting to slowly maybe stop their SIPs. We have not yet talked about the money flow.
Correct.
And if this trend continues, it could be a larger worry. Maybe this is just an indication, because if we're looking into the last many months data, it is increased. It was at 50%.
That's what I wanted to get into. So since September is when we have been seeing this fall. So this SIP stoppage ratio, again, to simply put it, the higher the number, 109% again means that there is a net number of SIPs reduction in the market. So from September is when we started seeing the fall in the market. In September, the SIP stoppage ratio was 60%. In October, it went up to slightly above 60%. November, it was 79%. December, it was 83%. And Jan, it is 109%. So you can see it is increasing as the market is falling down, thereby questioning the resilience of the so-called Indian equity investor or the SIP investor, because they've been celebrated a lot since 2020 that they're coming in, increasing their SIPs, doing a lot. But now we are seeing the number of SIPs going down, and that's what is triggering this.
But again, just bringing back to our conversation we had in this very stock market show earlier also. This is all like a ripple effect. So, the mutual fund inflow would be reduced, then investors would panic, FIs, would not pump into a lot of money, and then that cause panic. Now retailers were supporting our markets to a larger extent, but if they also start losing their trust into the markets, they might pull out of money, and this is like all a vicious cycle that we actually spoke about in one of our episode, and we are actually seeing that happening now. And I see if markets don't recover or something good trigger doesn't come, this 109 can go to even 200%. Who knows?
Yeah. But even when we say the markets are not performing, or even that SIP stoppage ratio is beyond 100%, there are pockets, or there are a lot of good news also happening. So on market performance, we have stocks like Bajaj Finance, Kotak, Muthoot, all of them hitting 52-week highs. And when you're talking about SIP stoppage ratio, you can see that the amount which is being contributed to SIPs, it has not moved. So around 26,500 crores from December to January, it's almost the similar amount. So
I understand it's very interesting data. Just to break it down again, it means that a lot of SIPs, number of SIPs are getting cancelled, are getting stopped, but the total amount of money being invested into SIPs is not changing.
Yeah.
It was around 27,000 crores back in December. It is again around 27,000 crores in Jan also.
Yeah.
So that amount, so it really baffles me. I'm trying to look into data to understand why it is happening when SIPs are being cancelled, but the amount still saying same. I don't really understand what's happening. My hunch is maybe there are some par investors who are
Yes.
still putting in money, maybe even pumping in more money. I
Yeah.
personally did put in more money last month. So there are maybe some pockets of people who are capable, who are interested, who are optimistic. Maybe they are putting in more money, but then there are lot more number of people who might be stopping SIP. So
Yeah.
that amount of data Amphi or no institution, no body is giving to us. But hey, that is what I make of that data at least.
And if you're looking at the total equity mutual fund inflow, we know of that too. So last month we had talked about in the same Aftermarket podcast that it came out to be 42,000 crores
Yeah.
net equity inflow into the Indian markets.
Out of the 42,000 crores, 27,000 crores was SIP.
Yes.
And the remaining is lump sum investments or
Yes.
one time NFOs and
And
stuff.
even this time, 39,000. So it has slightly dipped.
Correct.
39,000 odd crores is what has been pumped into the Indian markets. And in that, very interestingly, small cap contribution has increased by more than 1,000 crores.
See how interesting that is.
And totally 5,700 crores is what small cap mutual fund buying has happened. Mid cap has stayed flat at around 5,000 crores. Large cap mutual funds from 2,000 crores being pumped in December, it has come up to 3,000 crores. Still much lower than the others, but you can see across the board, people are just trying to buy the dip. And I think even though with the SIP number, there are a lot of good things that we can observe from these numbers. I know obviously the discussion remains. Is it just a bubble? Are people investing even at the bottoms without knowing where the market might stop? Right? All these discussions are pending.
Yeah, so I'd also love to hear from the audience. I like to see them commenting it in the comment sections so that we can read it later to understand if people are actually stopping their SIPs. Because the SIP stoppage ratio as a number is saying that, but the total amount of money coming into equity or SIPs have not reduced considerably. So I'd really love to validate which thought is correct. Is it more, maybe a lot of people reducing SIP and then some people increasing their amount? Yeah, but then again, it's very interesting.
So,
But-
fundamentally, if there is nothing wrong with the economy and people have money in their hands, the mutual fund inflow would keep on going up, or it'll be stable unless people panic. Okay, let's keep the panic aside, panic selling, SIP stoppage because of markets not performing aside. Fundamentally, if the country is doing well, economy is doing well, people's jobs are still secure, they're getting an income, the amount being pumped in might be the same. The economy, so far, at least in the bubble that we live in, things are looking okay. Like if
So while speaking about you telling things are okay, and that's why I heard like few prominent people putting out like very strong statements out in the public last week, right? So there's this valuation guru Ashwath Damodaran. I mean,
Yes.
even in my very old videos that I've done back in 2020, I remember quoting him. I remember watching his YouTube videos. He puts up very interesting videos on YouTube. He is a professor in
NYU.
NYU.
New York University. So he is this very famous person in the world of investing and valuation, especially. And him coming out saying that the valuation in which India is trading, which is Nifty is trading, makes no sense. He's saying the PE is astronomically high. PE does not justify the kind of valuation India is demanding. And he's even talking about India's story, because when he gives out his amazing lectures on valuation, he says a lot about the story of a company.
Yeah.
He says, yes, valuation is a lot of science, art, because there is the story element of the company which is coming in, and he is accounting for Indian story as well. So he's talking about the India story which is building, which people are bullish on, but he's saying even with the element of story of India, the greatness which could come along with India, still the valuation is not justified. It's the statement which he has put out.
Yeah,
now this is something which can panic people.
Yes.
Now people can be like, hey, if the valuations are not justified, then Indian markets could not just go down from here, but could stay at this point or slightly lower amounts from here for a long period of time. So that's definitely
if you're looking at India's current PE ratio of Indian stock market in general, it is at 23.73, accounting for all the recent falls which is happening.
And this is the top second when we compare it across the world.
Yeah, and US is number one at 26, right? So US is demanding a higher price to earnings ratio than India. So what is this PE ratio? It is basically the price or the amount which you'll be paying for a stock for which the company will be earning 1 rupee of profit, right? That is price divided by earnings per share. That is what you'll be seeing here. So when India's PE ratio is around not even as much as US, the question is, why are people, or why is he still calling India overvalued and not the US? So the concept here is, any great investor will always look at the future multiples of a company, future earning potential of a company. That means that if, let's take the example of Trent, which we talked about last week.
Correct.
Why is Trent having such a high P, 100, 200 P? That means the investors in Trent expect the company to grow at a huge pace compared to all of its peers. Hence, it demands a premium. And that price to earnings ratio of such high growth companies is always looked at from a 2026, 2027 perspective. The sad reality for India right now is, India does not, even with all the India story hand wavering, India is not living up to that growth standards that it is putting out. And that is his point here. India can have a high PE multiple or can justify or demand huge PEs if it was if its earnings was growing at a rapid pace, but that's not happening, unfortunately.
And even we saw Nirmala Sitharaman also quoting India is growing. The India's GDP is growing at 6.4% right now for this financial year, and in future also they are not expecting a crazy amount of growth that could happen in our country. So they
crazy
are
amount means I would call it more than 8%.
Yeah, more than, and they're still quoting some 6.8 to 7, not even 7ish, right? 6.6 to 6.8ish is what they're projecting even. But like rightly you said, if India wants to actually prosper and justify the P that India's companies are demanding right now, the GDP has to grow at least by 7 to 8%. And I see no things are moving around in that direction, which can justify or make investors be confident on that growth potential could be possible. So I think that is also one narrative that is coming from Ashwant Damodaran.
So one another interesting counter to what Ashwant Damodaran said came from Mr. Sandeep Tandon. So he is the CEO and founder of Quant AMC, very popular, very
infamous.
Infamous. I also have a lot of money invested with their very infamous flexi cap fund. But then Mr. Sandeep also came on record, and when he was asked, hey, Ashwant Damodaran saying so about India being trading at such high valuations, and he said yes, India is trading at high valuations, and India, because of the India story, might trade at such high valuations for next 3 decades. This is exactly what he said. So maybe that could also happen. Maybe we might continue to play this out, and we might continue to grow. Things could get better, and valuations could remain high, and markets could continue growing for the next
I
3
think
decades.
that's also what we just discussed. If the GDP and corporate earnings are growing, then you can demand even 30, 40p, right? Nobody would care. But in the day where your company quarterly earnings are not improving, your economy is not growing by so much, then this higher PE might be a problem. So the India story needs to become a reality at some point.
That's the whole point.
But again, the point that he stressed about is 3 decades. So it's a long-term vision that he's talking about. And that is where even investors should understand that it is long-term vision, not a short-term vision where, people are looking looking at think about it, from what, October is when September, October-ish market started coming down, and people are already panicking like it's been from 10 years the market is in bearish mode. No, it's just 5-6 months of bearish market that we are seeing right now, and nobody's seeing any returns out of it. And if you actually go back and look into the data, I think somewhere around 1995 to 2002, the mid caps gave zero returns. There were no returns, absolutely. And even from 2006 to 2013, such a long period also, in fact, the mid caps gave negative returns. So you have to understand, small caps and mid caps can stay in a bearish mode or a consolidation phase for very long time,
and you have to be prepared.
You have to be prepared for that.
So
mentally
that's where the objective
prepared.
comes into the picture, right? When you are investing money into small cap, I mean, I think the problem is where over the last a year or 2 years, when all these retail investors came in, they probably went to a popular mutual fund investment platform. They looked into funds which are giving high returns, and then they see small cap funds with a 3-year CAGR of 25%,
correct,
5-year CAGR of 20%, and they expect that. I mean, I don't know how to even blame people for that, because that's what they see. They see that on the chart and they invest expecting a similar returns over a 3-year period.
Yeah, in some sense, it is also intentional by all these apps, mutual fund platforms that they want to advertise it as a main.
So I think the point which is to come out here is, if you are investing into small cap fund, the duration in which you are investing for which you are investing for should be really high. For a small cap fund, it should be 10-15 years. For a mid cap fund, it could be slightly lower. For a large cap fund, it could be maybe 5-7 years. So you're thinking about any duration below 5-7 years, you should start thinking about your non-equity investments. And all of these clarity is what has to come in. And when investor is investing with this clarity even into a small cap fund, then I don't think such panic wouldn't be coming into the picture. But that's where I want to talk about another external factor which panned out last week, which was the very famous chief investment officer of ICICI Prudential AMC, Mr. Naren. He also came out along with all this. He's also coming out and grilling people for investing a lot of money into small cap and mid cap funds, and he's cautioning people to and asking them, why are you investing so much? And his speech kind of went viral, and now it's even being attributed that maybe he created some panic because of which people are selling, and market is also seeing a sell-off. But then, hey, someone as expert and senior as him also coming out and asking people, questioning people as to why are you putting so much money into mid cap and small cap is also I think very relevant to whatever
so we'll quickly break down what he said and why people think it affected the market this week. So Mr. S. Naren came out and said that mid caps and small caps are so overvalued, and they're more overvalued than even 2008 levels. So even at that time, market was overvalued. We saw the crash in 2008, but it is much more overvalued right now. And he's also saying at the same time that fund managers, do they have the capability, if people start withdrawing, what is going to happen? Do they have the capability to even manage the huge amount of inflows that is happening into the equity mutual fund space every single month? So all these are the broader questions that he asked, and it was a close group, close conversation. Someone published it, and yes, everyone is attributing his points to the fault.
But him questioning fund managers is very real.
True.
Maybe it was because of the talk he had. There is this interesting data which has come out saying that nearly there are some 3,000 fund managers in the country. And when I say fund managers, these are people who are working for AMCs and then acting as or working as fund managers for specific mutual fund schemes, right? Out of nearly 3,000 fund managers in the country, nearly 1,694 of them have less than 1 year of experience.
Oh my God. So let me try to summarize this. So Nihal on one side is saying that, okay, there could be phases of the market where SIPs might not deliver the returns that it could. And Sharika is also saying, even when you're investing into any mutual fund, let it be SIP lump sum, you should be very mindful about the mutual fund manager's experience also. Right? And so let me try to summarize both of your points together. Is it right to say that people are not so conscious when they think about mutual fund investing? They don't care about the fund manager. They don't care about the real returns possibilities and the realities, harsh realities of staying invested in the markets for a long time. And they should be more aware of it.
Yeah, something like that, right? When we say the experience of fund managers is low, the SIP population we are talking about, what is their experience in the market? Even their experience is 1, 2, 3 years maximum. So they also haven't seen market cycles. So their expectations are also not correct. So they have seen on screen 3-year CAGR of 25%, 30%, 1 year CAGR of 50%, and out of rationality or irrationality, they expect similar returns going ahead. I think that expectation mismatch is also a problem. But otherwise, and again, maybe influencers are also to be blamed for overselling, mis-selling this to some extent. But then my uber point being, what should investors think about here, plan here is to maybe use this as a trigger to do a reality check. To maybe reach out more, read more, understand more, learn more, and have a real understanding of what is real returns you can get. I mean, maybe there is no merit in having a portfolio which has 60% small cap, 30% mid cap, and 10% large cap with no gold, no debt. Maybe this is a trigger that people can actually take as to look and understand as to what should be a realistic portfolio be looking like, and then start investing into that. Because we see people very casually talking about making 25% CAGR in the long term. That is so biased because of recency. So I want people to get out of all those because of using this as a trigger, then understanding who they are, what is their real risk appetite. People do tell big words telling that, hey, I can take risk and all, but the resilience is not there. The moment they start seeing their money going down 20-30%, all that goes out of the window. So I want people to really introspect, to understand who they are. And I'm not preaching, I'm asking us also to do this. If we are panicking right now, that is what you have to do. Understand who you are, what's your risk appetite, what are your goals, and what is a actual possible conservative CAGR which can take you there. If your answer is coming out to be, or if you feel that you can make 20%, know that you'll only be able to make 15%. Do something like that, and then do calculations, and then invest into a diversified portfolio. Do that correction now, maybe do that expectation management, course correction if needed. And I think that is all that people
I think this story that we discuss about small caps, mid caps, it's actually two stories in itself. One about what is the reality of the market and market commentary, and two about the comments which are coming from outside the country, like Mr. Ashwath Damodaran or even S. Naren, and trying to understand if there is any merit to it. And I think the summary of it is there could be some merit, and what you should be doing is actually questioning yourself, as Sharik said, and even in the trying markets or testing, when markets test your patience, maybe you should think about going back to basics. That's my opinion, right?
So that is where what I personally follow, and I advise all of my friends and colleagues, and even for the viewers of our channel, right? So the SIP amount that you actually put in should be the amount that is not affecting you financially in your everyday life. That is where you will live with peace. So you are probably, let's say, you're earning a lakh salary and you're trying to do a 20,000 SIP. That 20,000 SIP that goes into your mutual funds or individual stocks shouldn't affect you mentally and financially. That is where you can invest and forget. That thing comes in, and even when the market is bearish, bullish, it doesn't matter, because you're investing it for next 15-20 odd years, right? So that is where you won't panic and you'll stay invested, you'll continue your investments, and after, let's say, 15-20 years, that is where you'll see the eighth wonder compounding kicking in and probably help you make wealth. And again, coming down to Sharik's perspective, where he said, why would anybody panic, or why should someone look into different diversifications and different options, is I would say take a step back, see how old are you, how much are you earning, how many obligations do you have, how many responsibilities that you have to carry, and based on that, diversify your risk. So let us say a person who's 50 years old and getting retired in next 10 years, there is no sense for that person to put 60-70% of his allocation into small caps or mid caps. Absolutely no sense, right? But let's say for you and me, we are in 25, 26, under 30, or even for Sharik near 30. So for us,
slightly over 30.
So for us, it is still fine to have a little bit more exposure into small caps or mid caps, because we have those 3 decades which Sharik was talking about to actually stay invested and see the benefits out of it.
So make use of the rupee cost averaging. Try to make sense or build a proper portfolio.
Correct.
try to have gold and debt in your portfolio so that even when the market is testing you, one, the gold will maybe hopefully act as a hedge to the market falling, and two, you'll have some liquid debt component that can be put in lump sum into the market, right? So even now people are saying, hey, I wish I had more money to invest.
True.
So situations like that shouldn't happen. And you should be having a debt component also. And I think that's the larger takeaway. And when the times are testing you, always go back to basics again. That's what I believe. If you don't have the risk appetite, as Sharik said, maybe stick to large cap investing, look at low beta stock investing, so that you will not be affected so much by the volatility which is happening in the market. And I think that's where we can wrap up the first story of the day and move into the second interesting story, which is
Narayan Murthy again making news with Infosys, right?
Yeah, and without even him knowing. So,
actually true.
Yeah. So Infosys laid off 400 employees or freshers from their Mysore campus recently, and it made huge news. Everyone started making a huge deal out of it. Some for the right reasons, some for the wrong reasons also. So if you're asking about why this became a huge deal, it was fully, I mean, we are living in the internet age, right? Properly reported, even the minute details of a girl actually fainting and not being even allowed to stay one extra night in the Infosys campus, that causing a lot of internet rage. And rightfully so. Narayana Murthy being put back into the picture and being roasted for his comments from last year saying that Indians should be working 70 hours a week and they're not hardworking enough. So I think a huge debate is up here.
So it's a very interesting discussion because if companies are planning to lay off and send more people and maybe even use AI to get more work done, it is good for shareholders if you think about it. Because companies are becoming more efficient.
Correct.
Without spending more on employee costs, they are now leveraging technology to maybe match the productivity or even increase the productivity. So it's higher productivity, higher output for the company with lesser cost, which is exactly what a capitalist environment requires. The company would do good, it would start reporting more profits, and shareholder value and wealth would increase.
So our mutual funds, our stock investments, all of them.
So we can be happy thinking about that. So that's the capitalist stock investor angle to it. And then there is the moral human angle to the whole thing where, hey, our job security getting over us, our company is becoming insensitive to humans and like, I don't know, like sending people away just like that with no proper notice and caution and
bouncers
all of those.
Actually escorting people out of the campus.
Right.
And,
so where is the world even going to? I mean, should we lose out on a lot of these values and who we are truly at core for being capitalist or making more profit? So I think that is what is triggering a lot of people. The world is polarized. I wouldn't say polarized to a large extent because a lot more people I see, at least on the internet, who are more vocal for human rights and more empathy from the company. It's just very few people who want companies to do this for maximizing shareholders.
But again, here is where I would like to come in and give some opinions, right? So you have to even understand why were these 400 people, or in some articles 700 people, laid off, because they couldn't pass a threshold. They were conducted
an exam.
They had an exam and they couldn't pass that exam and they were laid off.
It's just that the exam was not planned. The cutoff mark was changed at the last moment. It was not informed earlier, and the moment they did not pass the cutoff mark, they were asked to leave ASAP, which is all the inhuman part of it. But I also get.
But again, think of it like, let us say a government exam, or let's say we all had our 10th board exams or inter board exams or whatever. So let us say the passing percentage when I was studying was 35%. But now let us assume so I saw so many people around me studying only for that 35 marks. Think about how bad that situation is and how pathetic that is, that a student or a aspiring employee is actually willing and putting his hard work and dedication to not get the 100% or become the best, and is actually trying to cross that border mark. And that is where, even if let's say Infosys guys have not informed anybody about the threshold that they have to cross and they have increased it, I feel it is okay. That is cutting down all the ineligible people who are not ready to do hard work, who are not ready to put in that effort for themselves and for the company. I feel it is again inhuman, immoral, that is all there. But you have to understand the mind and stage of how our Indian youth are currently. They're not ready to put in that hard work.
Mr. Narayana Murthy
exactly.
And got into a lot of controversy. Like people are not he said what I took away from his statements. I hope he meant this was 70 hours. He set as a like revolutionary thought process, right? Think of 70 hours. Maybe you can do it more efficiently. But if you don't set it as a benchmark and you're not ready to work at least that much, then you won't be able to excel or create something extraordinary. That's what he had said. And yeah, that's
if I was an employee in Infosys and let's say Narayan Murthy comes to me and says you have to work 70 hours so that this much of output you can deliver, how I would personally think and feel is, okay, he's expecting 70 hours of work from me. Now, how can I upskill myself and optimize my time that probably I will be able to do it in 40 hours? That is how I would think and start putting my time and effort into upskilling myself. That is not how our Indian youth is currently thinking. They are going like, this is very inhuman. With government even giving lot of schemes and all of privileges to these people and giving them freedom of speech, they come out in public and talk about government is pulling us down, companies are not giving us jobs. But first of all, I would ask every youth who's listening to this video, are you even employable? Do you even have the skill? Because I remember me and Ajay talking about people in TCS and HCL working who doesn't even know how to turn on a laptop.
Yeah.
And then you expect these big IT MNCs to come and give you jobs.
Yeah.
Come on, guys, wake up.
My cousin who is working in one of the large IT companies in India, he is managing a fairly large team. So he told me that when he is observing the people who are working under him, he has to pick each of them for projects. Some are purely ineligible to be even having a normal job. They don't even know how to operate a laptop. And it's the sad state of affairs that they're being paid only so much. I'm not saying they're high paid employees, the best or anything. They're being paid only 20K or even under 15,000 rupees per month in Bangalore. But they don't have the basic proficiency. And these are not freshers or who have been just hired. These are people in the work role or the payroll of the company working there for 1-2 years. Imagine what is the state of the larger companies in India where the managers might not even be knowing who is working under them.
True.
Right? And this could be the state
so that's
of things.
another sad reality of all these IT services companies, all these popular ones with their mass recruitment policy. I mean, even back in my college days, I remember during placement seasons, these are called mass recruiters. And people who do not get placement in any other good companies, they find peace with the fact that at the end there will be these mass recruiters who will come and recruit them. That is the worst case outcome for all these people who are planning to get placed. But that's something. What is very interesting there's this data saying that for the last some 10-20 years the pay for these freshers haven't changed. It has been at around some 3 lakhs per annum and it has not moved for a very long time, where all these senior folks at these companies, their pays have increased a lot. So that's also very, very interesting. But again, I also really want to bring back perspective here, back into Infosys, back into investing, back into stock market, by saying that while this is just for 400 people very here and now. I think even people are glorifying it a lot because of Narayan Murthy's comment. And so people just want to have fun with all these. But otherwise, if you look into Infosys as a company, they, I think, hired nearly 6,000 people, new employees in the last quarter alone. And in the coming year, they are planning to hire 20,000 freshers. So it's not like they're cutting down on cost or they have found some magical way to create similar or more productivity with lesser people. Nothing like that. I think this is just one-off event which they did, and more discussions are around maybe where they insensitive to these people. That's
on one side, I'll say I agree with what Nihal says, that the Indian youth need to upskill themselves.
Absolutely.
If they're on the bench, try to understand what's happening, how can they improve. And the best people that I've seen, they've started their lives as people in Infosys, TCL, HCL, and they've jumped jobs, and even Infosys knows this. So they reach up to a particular level, they jump their job, they go for 300-400% increase in their salary, and they do really well in life. They even move out of the country, move to the US and such, right?
And even if you actually look around us also, who are actually having the skill set are all employed and doing well. Somebody who doesn't, stay up to that mark only are being punished. So that is again a reality check for everyone.
And on the other side, I would want the Indian companies to actually have a change in mindset also. Like when Narayana Murthy is demanding a 70-hour work week from the employees, I would want us to demand something back, right? Which is, hey, are you taking your employees with you? So earlier in the day, Infosys was very famous for its ESOP policy, where they gave out shares to each and every one of their employees, including Mr. Narayana Murthy's driver, and even the office.
The helper in the office. I think that's also a story which has gone really famous.
The story is that the employees, the coders there were afraid of talking something about the tea wala, as they called the person, that because that person might be more wealthy than the engineer.
Exactly.
He would be having a lot of Infosys stocks. That was a company that Mr. Narayana Murthy built. But then today, that's not the case. Indian companies does not give shares or ESOPs in the way that even US companies even today do. Much larger companies operating at a much crazier scale. Even Amazon offers huge ESOP packages to a wider range of its employees, while Indian companies start from VP or
but
even
again,
higher
this is
positions.
where sometimes this could mislead also, because when we see Amazon offering 1 crore package, and in that 70% or 60% is ESOPs, people get would again, but again ESOPs has a limit. You have to wait till the waiting period ends. All of this is there. So again, I just don't want again this companies to come out and bluff about the packages and lower talent using ESOPs.
Yeah, I mean, not just about lowering, it's about taking the employees with you or the workforce with you.
True.
And
Correct.
you're just like Mr. Dibinder Goyal took InfoEdge along with them. Take your employees with you so that they'll stay with you for longer. They'll want to upskill. They'll want to contribute to the company.
Yeah.
And as the meme goes, create shareholder value while creating value for yourself. That's
Correct.
what could be the theme here.
Yeah.
So I think everyone has some good takeaways here. And that's where we should wrap up today's story.
Yeah. And before we just wrap up, let our audience also understand very few interesting things that happened around the world. Is Narendra Modi meeting Donald Trump today, and he might even talk to Elon Musk, and who knows, maybe Tesla is coming to India or Starlink is coming to India. We never know.
Yeah.
And the other thing which I was mostly interested in, just before budget we discussed, maybe at least this time India should start its footprints in AI. And we've seen in the budget, while only 500 crores was allocated, and later, I think yesterday or today, there was again a news which said Cabinet has approved 10,300 crores to be allocated into AI. And the assumption is we will be 9x faster than DeepSeek, and we are able to provide it at much lesser cost than any other GPU around the world.
Yeah.
So that's a big win again for India.
Yeah. And all the stocks like Kotak Bank, I talked about it. Muthoot Finance hitting its all-time high. Then even Bajaj Finance, it has been rallying up like crazy without any one particular reason at all, right? So that shows some resilience in the market despite the market falling. So I think that's also something we need to highlight.
Yeah.
And that's where I would also want you to subscribe to the channel if you like the podcast, and also check out our Market Feed Clips channel, where we'll be posting bite-sized portions from this video. So I think that's where we'll wrap up the day. Thank you all for joining in. As always, you're the fourth listener or the fourth participant in the show. So make sure you comment down any and all of your thoughts in the comment section down below. I'll be sure to reply to all of them. So let's wrap up the show.
Yep.
This is Ajay Adit signing off. See you all. Bye-bye.
Bye.
Bye.